Wealth. Welcome to our YouTube channel. Don't forget to like, comment and share our video, and also subscribe to our YouTube channel. Thank you. Fast and effective tips for teenagers to build wealth. Investing is one of the most powerful ways to build wealth, but it's often seen as a game for the rich and experienced. However, that couldn't be further from the truth. The earlier you start investing, the more time you have to allow your money to grow. Teenagers have a unique opportunity to start investing early and build a solid financial foundation for their future. In this video, we will be discussing fast and effective tips for teenagers to build wealth through investing. From understanding the stock market and identifying your investment goals to choosing the right investment vehicles and creating a diversified portfolio, we'll cover everything you need to know to get started on your investment journey. Whether you're saving for college or just want to build long-term wealth, this video will help you make the most of your money and achieve your financial goals. 1. The importance of investing early. When it comes to building wealth, time is one of the most important factors. The earlier you start investing, the more time your money has to grow. This is especially true for teenagers, who have the benefit of time on their side. Investing early means that your money has more time to compound, which means that the interest or returns you earn on your investments will also earn returns. This is called compounding interest, and it's an incredibly powerful tool for building wealth over time. For example, if a teenager invests $1,000 at the age of 15 and earns an average of 8% return per year, by the time they are 65, that investment will have grown to over $30,000. However, if they wait until the age of 25 to invest that same $1,000, it will only grow to around $10,000 by the time they are 65. Investing early also means that you have time to recover from any losses. Investing always carries some degree of risk, and it's important to be aware of this. However, the longer you have to ride out any market fluctuations or downturns, the more likely you are to recover and continue to grow your wealth over the long term. In short, if you're a teenager looking to build wealth, the best thing you can do is start investing as early as possible. Even if you can only afford to invest small amounts to begin with, the power of compounding interest means that your money will grow exponentially over time. 2. Understanding basic financial terms and concepts. Before diving into investing, it is important for teenagers to understand basic financial terms and concepts. This includes understanding the difference between savings and investments, compound interest, and risk versus reward. Savings are funds set aside for future use, while investments refer to putting money into something with the expectation of receiving a return on that investment. Compound interest is the interest earned on both the principal amount and any interest accumulated over time. It is important for teenagers to understand the power of compound interest in growing their wealth over time. Risk versus reward is another important concept to grasp. Risk refers to the possibility of losing money, while reward refers to the potential gain. Generally, investments with higher potential rewards also come with higher risk. Understanding these basic financial terms and concepts is crucial for teenagers to make informed decisions when it comes to investing. It will also help them to better understand financial news and advice from professionals, allowing them to make more educated choices about their financial future. By having a solid understanding of these concepts, teenagers will be well on their way to building a strong foundation for future wealth building. 3. The different types of investments. When it comes to investing, there are different types of investments to consider. Each type of investment has its own level of risk and potential for returns. It's important to understand what each type of investment entails so that you can make informed decisions about where to put your money. One type of investment is stocks. Stocks are shares of ownership in a company. When you buy stocks, you're buying a piece of the company and hoping that the company's value will increase over time, leading to an increase in the value of your stock. However, stocks can also be volatile and the value can decrease quickly as well. Another type of investment is bonds. Bonds are essentially loans that you give to companies or governments. They pay interest on these loans, and you receive that interest as your return. Bonds are generally considered to be less risky than stocks, but they also offer lower potential returns. Real estate is another type of investment. This involves buying property, such as a house or apartment, and either renting it out or selling it for a profit. Real estate can offer good returns, but it also requires a significant upfront investment. Finally, there are mutual funds and exchange-traded funds, ETFs. These are collections of investments, such as stocks and bonds, that are managed by professionals. By investing in a mutual fund or ETF, you can spread your investment across multiple companies, which can help reduce your risk. It's important to understand the different types of investments so that you can choose the ones that are right for you based on your risk tolerance and financial goals. A diversified portfolio that includes a mix of different investments can help you build wealth and reach your financial goals. 4. Creating an investment plan. Creating an investment plan is an important step in building wealth as a teenager. The first thing to do is to set your financial goals. Do you want to save for college, a car, or a home? Or are you looking to build long-term wealth? Once you have identified your financial goals, you can set a timeline for achieving them. The next step is to choose an investment strategy that aligns with your goals and timeline. There are many different investment options available, such as stocks, bonds, mutual funds, and real estate. Each investment option comes with its own risks and potential rewards, so it's important to do your research and choose investments that fit your comfort level and financial goals. Once you have chosen your investments, it's important to regularly monitor and adjust your investment plan. This means keeping track of your investment's performance and making changes if necessary to ensure you stay on track to meet your financial goals. It's also important to remember that investing is a long-term game. While it can be tempting to try to make a quick profit by buying and selling stocks frequently, this can be risky and often leads to losses. Instead, focus on building a diversified portfolio of investments and sticking to your long-term investment plan. By creating a solid investment plan and sticking to it, teenagers can start building wealth and achieving their financial goals at an early age. 5. Exploring different investment strategies. When it comes to investing, there are a multitude of different strategies to choose from. Some investors prefer a more hands-off approach, while others may enjoy actively managing their investments. Here are a few different investment strategies to consider. 1. Index funds. One popular investment strategy is to invest in index funds. Index funds are mutual funds that track the performance of a specific market index. By investing in an index fund, you can gain exposure to a wide variety of stocks or bonds, while minimizing your risk. 2. Dividend investing. Another strategy to consider is dividend investing. Dividend stocks are stocks that pay out a portion of their earnings to shareholders in the form of dividends. This can be a great way to generate passive income over time. 3. Growth investing. Growth investing involves investing in companies that are expected to grow at a faster rate than the overall market. While these investments can be more risky, they can also offer the potential for higher returns. 4. Value investing. Value investing involves looking for undervalued stocks that have the potential to increase in value over time. This strategy often involves investing in companies with strong fundamentals that are trading at a discount to their intrinsic value. It's important to note that there is no one-size-fits-all investment strategy. The key is to find an approach that aligns with your goals, risk tolerance, and personal preferences. By exploring different investment strategies, you can find the right approach to help you build wealth over time. 6. Common investing mistakes to avoid. Investing is a great way for teenagers to build wealth and secure their financial future. However, there are a few common investing mistakes that should be avoided to ensure success. The first mistake is not doing enough research before investing. It's important to research the company or investment opportunity thoroughly and understand the risks involved. Blindly investing in something just because it seems popular can lead to financial loss. The second mistake is investing money that you can't afford to lose. Investing always comes with some level of risk, and it's important to only invest money that you can afford to lose. This means not dipping into emergency funds or money that's set aside for important expenses like college tuition or rent. Another common mistake is having unrealistic expectations. Investing takes time and patience, and it's important to have a realistic expectation of how long it will take to see returns. It's also important to remember that the stock market can be volatile and there will be ups and downs along the way. Lastly, a common mistake is not diversifying investments. Investing all your money in one company or industry can be risky. It's important to spread out investments across different companies, industries, and even asset classes to reduce the risk of losing all your money in one fell swoop. By avoiding these common investing mistakes, teenagers can build wealth and secure their financial future with confidence. 7. Tips for saving money and growing wealth. As a teenager, saving money and growing wealth may seem like a daunting task. However, it is crucial to start thinking about it early to set yourself up for financial success in the future. Here are some tips to get you started. 1. Set a budget. It's important to know where your money is going in order to save. Create a budget that outlines your income and expenses, and track your spending to make sure you're sticking to it. 2. Start small. Building wealth takes time, but every little bit helps. Start by setting aside a small amount of money each week or month, and gradually increase it as your income grows. 3. Take advantage of compounding interest. The earlier you start investing, the more time your money has to grow. Look into opening a high-interest savings account or investing in a low-cost index fund. 4. Avoid debt. Credit cards and loans can be tempting, but they can also lead to high interest charges and debt that can be difficult to pay off. Try to avoid borrowing money whenever possible, and pay off any debts as quickly as you can. 5. Stay informed, keep up to date with the latest financial news and advice, and don't be afraid to ask for help or seek out a financial advisor if you need guidance. By following these tips, you can start building wealth and setting yourself up for a financially stable future. Remember, every little bit counts, so start saving and investing as early as possible to maximize your returns. We hope you enjoyed our video. Investing can seem intimidating, but it is an essential skill to learn if you want to build wealth for your future. By following the tips outlined in this video, you can start investing today and set yourself up for financial success in the years to come. Remember that investing is a long-term game, and it's never too early to start. We're excited to see where your investments take you in the future. Don't forget to like, comment and share our video, and also subscribe to our YouTube